Hey guys, what up? Welcome to this video. Okay, it's one of my favorite course I'm going to be teaching you in this tutorial today. How to trade off of a 4 hours time frame analysis. Now, you need to understand something. I want you to stick with me to the end as I'm going to be breaking it down on how the different candlestick pattern have been formed, on how to understand chart patterns even in the trade. Okay, some folks get freaked out when they see some certain move and they don't understand what the market is doing, and they close out the trade, and all of a sudden the market suddenly move in their favor. If you have been in that position before, there is something you don't know. I keep telling folks on my WhatsApp DM that if you're actually making losses or you envy somebody that is actually making money, there is something the person know that you don't actually know. And if you eventually get to know that thing, you eventually get to make the money that the person is what making. So I'm going to be showing you what you need to understand about what chart formation about 4 hours time frame and the mystery behind it. For the sake of this video, I'm going to be explaining on gold. Okay, it's a deep secret that I've actually been longing to share with us, but I learned it from Rena, feeding with Rena. I learned it from him, and it has been a lovely tool and it has been helpful. So I'm going to be showing you what I do in this analysis in 2024 and how it was able to give me the profit that I needed. Okay, so let's dive right in. This 4 hours time frame, but since you're going to be using 4 hours time frame to trade off of, if you look very well, each of the candles, each of the time frame have the way that they move. If you go down to 30 minutes, you see the candles, they are more, they are actually much, they're more than the 4 hours time frame. Now, one of the reasons why we actually go to higher time frame to do our analysis is because higher time frame, see, the candles are actually more than the 4 hours. So we go to higher time frame to do analysis because why? We want to see what the big picture is doing. Now let me tell you a secret. The big banks, they trade off of higher time frame. What that means is that they go to the, since we're using 4 hours to do analysis, I would like to work up from monthly. Okay, I like to work up of monthly. Let's see what the monthly time frame is saying. Okay, so this is what we're going to be doing analysis from, guys. Just stick with me. I'm going to be showing you some of the things that you need to be aware of. Okay, I'm almost there. Okay, someone will ask me why am I coming to the monthly? To tell you why, it's very simple. Okay, let me take this all out so the chart will become clearer. Okay, in case you want to wonder, please, you're using price action to do an analysis to know what the market is actually saying. Okay, let's just base it off of this. Trading view is kind of like crazy sometimes. Okay, here we go. Okay, let's analyze from here. Now, as you can see now, what we're seeing here is actually the market is actually bullish. Okay, if I should draw this from here, we'll notice that this zone here, giving us a higher high, sorry, it's giving us a higher high here. So okay, let me take one out. This is giving us a higher high here, so we know that this market is actually bullish. From the picture here we are seeing, we know the market is bullish. So all this stuff that is happening here, is just to tell us that this market is actually bullish, but it might be in a retracement move. Okay, let me zoom it out closely so you get what I'm saying. Okay, let me zoom it out. Okay, I think this is better. Okay, the market has actually been respecting trend lines here. Let me take this down. Okay, so we can see the major zones here. If you watch the video I talked about trend line, you understand what I'm saying better. The major zones we are having here is one. There was a pull. If you go down to the lower time frame, you see that this candle, this week of this candle, actually came to the trend line and gave us a chart pattern in the lower time frame. Okay, this is it. Okay, let me quickly say something. This will help you iron some things out. Anytime you see a week like this in the higher time frame, don't ignore it. Go down to the lower time frame and you find out that this week is actually a candle chart pattern, or it's actually an entry trigger that took price to the upside. We're going to be confirming that. If you stick with me to the end of the video, I will show you how this thing actually works. Now, what did we see happen here? A break out of the trend line. And whenever we see a break out of a trend line, it actually means that the market is going to be retracing back to that trend line and then reverse off to the downside, right? So now we have a clear picture of what this is. We are expecting this market to retrace back. See, the price came back to this trend line here, this zone here. So as you can see, the price came back to the trend line there. So what we are expecting this market to do is to retrace down. But don't forget, the retracement does not necessarily mean that we are going bearish, or we are turning bearish momentarily. It does not mean that the market is actually bearish, because as we can see, we don't base off. There was a mistake I was always making while I was new into trading, and I think my boss was able to correct me on that, my mentor. So there was something I was always doing. I was always after a single candlestick that is being formed for the monthly. It's not that way, guys. We check off of everything. As you can see, this market is bullish. It's to the upside. The price is to the upside. It's to the upside. So we shouldn't be looking for sales opportunity, except for this scenario here. If you're trading off of here, if you're trading off of here and you want to sell to the downside, you should know that the market is bullish though, but it's actually turning bearish because we are seeing a trend line break and a retrace to the downside. This retracement here might come back to this downside here. Anything around this zone, anything around this zone, anything around this zone, these two zones here. Yeah, this last week that took price up and somewhere around here before going back up. But it doesn't mean that we are totally bearish. It means it's a retracement move, and now it's just a bearish retracement move, but the market is actually bullish. So now, since we have what the market is doing in the higher time frame, now you can now go down to the lower time frame and what you should be looking for. Since you know that the monthly is having a momentarily a retracement to the downside, we should be looking for sales opportunity. I love to trade with the trend. Okay, the trend is bullish, but currently we are actually in a retracement move. There are two options here. You can either wait for the market to come back down to the downside, or you trade, then you wait and trade bullish, or you trade with the retracement move. But this is a counter trend trading because the market is actually what, on the retracement move. But I'm not going to be showing you this because I don't trade retracement moves. I trade bullish and bullish following the trend to the upside because the market is bullish. I've actually been buying on this trade, not until we got the break that shows that the market wants to turn bearish. So I'm going to be showing you based off of what I trade. I don't trade retracement move. I only trade I trade trend trading strategy that talks about the market being bullish. Now, what I do is this. This is my time. This is my trend line. Okay, I use trend line to trade, and in every trend line, once there's a break and I don't understand what is happening, I just stay away from the market. So this is what I'm going to be doing. I'm going to be showing you guys this. This is the trend line. This is the overall trend line because you're looking from the monthly. So since I see that this market is bullish here, this market is bullish here, all the zones here, what I'm going to be doing is I will go down to the lower time frame here. Let's go down to let's go down to I wouldn't be going down to weekly since I've already gotten the picture, but let's just check out weekly what it's doing. Okay, this is a weekly time frame. As you can see, it confirms what we saw in the higher time frame. Let me quickly just say this. I'm going to be showing you a formula. It is called a mere formula that I told you I learned from Arena. But first of all, let me align something. um, Please, if you want to be profitable, you have to be able to align your monthly, and if you need up monthly, weekly, daily, and 4 hours time frame together with the lower time frame. I called it weekly, daily, and 4 hours time frame. Now what that means is that whenever you see weekly at this trend line here coming down to this trend line here, please stick with me. I will show you what the main formula is all about. Okay, whenever you see this stuff here, uh take this out, this market come to this trend line here, here, and here, somewhere here, sorry, before the breakout, yeah, somewhere around there. So what that simply means is that we're going to be making sure that the lower time frame is actually showing us the same thing. What I mean by that is that this is the weekly time frame, this is what it's showing us. The 4 hours should be showing us the same thing. The 30 minutes should confirm what we saw in the 4 hours. Don't forget, the only difference between this time frame is that they produce each candles at their own time zones. This one is weekly. Take 1 week for each of these candles to be formed. It take daily for a daily candle to be formed. It takes 4 hours for a 4 hour candle to be formed. So what we're going to be doing is, if you are what these guys do, swing traders, we check off of the weekly and make sure it aligns with the 4 hours and the daily, and the same time with the 30 minutes before we enter the trade. But what day traders do, I'm going to be teaching this video just for day traders, okay? Because I believe that is what every beginner wants to be looking for, seeing profit every day before they leave the market. Okay, let's look for day traders. So why as a day trader we do analysis? Since we're checking the monthly, we work down to the daily. Okay, what the daily time frame simply means is that it take 1 day for each of these candles to be formed. Now let's go down to see an area of value. Yeah, this is where I'm going to be teaching you the mere formula. Okay, just stick with me. Come on. As you can see, the candles are actually much in the daily time frame, whereas in the monthly time frame it was just few. There is just few. Okay, let's just, please identify something here. I don't know if you're noticing it. This trend line here, we actually drew it off of the monthly, right? Okay, so the monthly has actually been respecting the trend line. The only difference is with the daily is that the candles are going to be much. The candles are going to be much. Okay, now, okay, this is the mere formula that I used in trading. MAEE. M. Okay, area of value here. Area of value here. Let's, okay, here, the same thing we saw in the higher time frame. So what we're going to be doing now is go down to the lower time frame, which is the 4 hours. Okay, like I said, mere formula. M stands for market structure. What's the market structure? There are only two market structure that we have that I trade off of. Now the first one is bullish and the second one is bearish, but in this case the market is actually bullish, so we're going to be staying with the market flow. The flow is bullish, so what we do is we go down to the 4 hours. The main formula, like I said, market structure bullish. Okay, so what we do is you write M and you tick bullish. Now the next one is area of value. Now the area of value that I trade for, there are two. Now the first one is moving average and the second one is The first one is moving average. The second one is trend line. And what I like to do is trade off of trend line. I like to trade off of trend line. Trend line in the sense that if the market comes to the trend line, it comes to respect trend line. That's one of the things I've observed about the market during the course of my trading in the forex market. I've got to understand that the market respect trend lines a lot. Okay, so the area of value here is trend line. So what is trend line here? If the market comes to the trend line, what you're going to be doing is you tick good. There's a way I do it. I just tick good on it, or you tick trend line. The first one, like I said, market structure bullish. You write bullish. The next one is trend line. You just write trend line too, or you just tick good on it. Okay, as you can see, the candles are going to be much. They are going to be much in the 4 hours because where we are coming from is the higher time frame, and we drew out our trend line off of the higher time frame. Okay, let's stick with me. Let me see if I can just get this done easily. Okay, if you're finding any value in this video, like and video. So if you're finding any value in this video, I'd like you to subscribe, like, and hit the comment section. So as you can see, the candles are actually much. They are much because what we are using is the higher time frame trend line. Ah, gee, you come out now. Search. In case of you guys are having the same challenge with trading view itself, you'll find out that it's very slow. So what I prefer to use is direct trading view. It gives me exactly what I just want. So trend line. This was the first move that took the price to the upside. So what we're going to be doing is we identify this here. So if you look closely, you will see something here. Let me take this out. Okay, let's draw the trend line. You're on MT4. Okay, we already have it here. So let me take this out. Okay, so sorry, let me call this trend line. By the way, I will tell you why I drew this other trend line. Okay, tell you why I drew this other trend line. Yeah, this one you're seeing here. So I'll stop at 1 hour. I'll stop at 1 hour. Yeah, so as you can see, the price came here. It came here. Okay, it came to this trend line here because I drew it from the 4 hours. So immediately price come to this trend line here, I'm going to be looking for opportunity to take price to the upside. And as you can see, the price was able to move to the upside. and this was another opportunity for me here to enter off. This was the first opportunity. This is the second one. And when the price broke out of the trend line, we had the opportunity to exit the trade. This was for the minor trend line. Take note. Let's go back for us. Let me show you something. This was on the minor trend line. So this one, I don't know why this stuff is doing like this. Okay, 1 hour time frame. Let's use from the 1 hour. Since the 4 hours has already moved to the trend line, so we look for opportunity to enter off of that and take price to the upside.